if a partner receives a deck or a pitch from that round, I can almost guarantee you they will be interested in having a look. And that's what we're doing with our brand. We are building this trust in the ecosystem that actually, if there's an introduction made via our platform, it's going to be a valuable one and not a waste of your time.
Hey, I'm Vishesh, your host. I'm a 5x founder and CTO. Still building. I also help founders like you ship faster and fix what's slowing you down. More at vishesh.space.
I'm joined by Bradley Jones, founder and CEO of ThatRound, a pioneering early-stage investment firm that's disrupting traditional investment models in the UK. With a background in mathematics and a passion for entrepreneurship, Bradley has built a reputation for identifying and supporting innovative startups. In this conversation, we explore the key insights and takeaways from ThatRound's approach to investing and scaling.
Hey, hi, Brad. Thanks for joining me on the podcast.
Hey, Vishesh, how's it going? Glad to be here.
Awesome. You've happened into entrepreneurship very early in your 20s. You want to give a little bit of background and context on what was your first business and what are you up to these days?
Yeah, sure. As we discussed briefly before, becoming an entrepreneur or kind of getting into this world of startups was not something I'd ever really planned. Since my teenage years, I was always interested in becoming a trader, actually. I know back in 2006, 2007, kind of in the UK scene, most people wanted to go into investment banking. There was a big buzz around becoming an investment banker, and that was the world to be in. Obviously, things changed quite dramatically after 2008, where everybody hated the bankers after the Lehman's crash and so on. But
Yeah.
I kind of spent my teenage years wanting to get into that world. And one of the things that I had a perhaps natural talent for when I was a teenager was maths. So I ended up going to Imperial College in London, studying maths. But really it was just a stepping stone to eventually getting into the banking world. As most kind of young aspiring bankers were doing at that time, it was all about getting a bit of an extracurricular activity on the CV, right? I guess we'll talk a little bit about the startup world later, but really more in those days investing in open markets, right? So like listed equities, and there was an investment club at the uni where people would meet and talk about which stocks to buy, whether to buy gold, this kind of stuff. Crypto wasn't really a thing then, but I've since also got into that as well. But yeah, so like this extracurricular activity, this other thing on my CV was this finance society. And I spent a couple of years working my way up the ranks, and in the final year, there was a vote for the president. It was quite a big thing for me personally, because the Finance Society was the biggest society at the university, 3,000 members, a big budget. And so kind of that presidency role in my mind was like, okay, if I get this is the thing that's going to get me the banking job that I want. So I went into the election for that. And what happened, Vishesh, was basically I promised something which I didn't know if I could deliver. So in true politician style, basically what I kind of promised to the society was that I was going to run the UK's most realistic and best trading simulation that there'd ever been. And my thought process around this was, the banks always used to come to the university and they used to try and show off their potential jobs, basically. They're trying to recruit the best students to come to work at their bank. And one of the things that they used to do is they used to run these trading simulations, but they were just not very realistic at all. So they would bring 50 students into a computer lab, and everybody would sit there with a screen in front of them, buying and selling on news. Of course, at that time, I'd already spent some time working within banks in different internships, and I had a more realistic knowledge of what the world working in a bank as a trader looked like. And so it kind of, it annoyed me a little bit that the banks were doing this, because it was kind of like they're trying to show off what it's like to work in a bank by doing a simulation of something that was not very realistic. In a bank, just for context for your listeners, traders don't sit there and look at news and buy and sell things. That's kind of like a one-player computer game. Traders buy and sell things from other people in the market, right? So as a trader in a bank, you're picking up the phone all day long and you have clients that are panicking, wanting to sell something, and you buy that thing from the person and then you try and sell it to the next person. A much more dynamic and vibrant and social atmosphere, right? We've all seen the videos of traders on trading floors, with 5 phones hanging around their neck, screaming at one another. And that was what trading was like, and still is like, in some respect. Things are much more digital these days. Anyway, I guess that was the first thing that as a young entrepreneur, or not even knowing I was an entrepreneur at that time, it annoyed me. And so I pitched to the Finance Society, look, we're gonna do a simulation that's more realistic across the country. And fortunately, I got voted in. Unfortunately, didn't know how to run this simulation. So, I suppose, again, in true politician style, got voted in and then immediately had to figure out how I was going to deliver on my promises. So,
Well, most politicians don't do that, but good
that's
for
true.
you.
That's true. So maybe there's a career in politics for me later on in my life. I don't know, because I did deliver on this. And, back to your question, this is how my first stint in entrepreneurship started. It was never designed to be a business, but what happened was, I got voted in as president, and I then, after the celebrations, go and sit down and think, right, how am I going to deliver this trading simulation that everybody wants? So first thing I did was I went to all of the different financial training companies in London. There's lots of them. They all have different bits of technology, and most of them have contracts with the banks. And I sat down with them. And as president of the Finance Society, we had a reasonable budget of cash because we had all the banks that sponsored us. So, I had a budget, and I sat down with all these guys. I said, look, we want to run a simulation and it needs to look like this. Can you do it? And of course, every single one of them said no. And so I then basically said, okay, if they can't deliver it, I'll do this myself. So I put posters up across the entire university, basically saying, look, developer wanted, meeting time and place, and sat there, and eventually one person turned up. That person eventually ended up becoming my co-founder, and we're now best friends. We were best men at each other's weddings, and have done lots of different business together. But at this point in time, this was a German computer scientist at the university that kind of said, look, I want to help you build this thing. He was a member of the investment club as well, and he basically saw what it was I was trying to do and was super interested. So anyway, 6 months of long, hard work. And, I can remember being sat in the computer rooms at Imperial College until 3:00 in the morning with a huge flow diagram on the wall of this, press this button, needs to do this. And this guy under my instruction, because I wasn't really a coder, I was a mathematician, but I knew a bit of coding, but not a huge amount. Under my instruction, he helped me build this software. Eventually, we ran the trading competition. We invited teams of 5 people from the top 20 universities across the UK. So we had Oxford, Cambridge, Durham, Warwick, Edinburgh, Imperial College, LSE, UCL. All the big universities had teams come down. We had all of the big banks sponsor the competition. Morgan Stanley, Goldman Sachs were there. And we ran the simulation, despite having slept no more than a few hours for probably the last week beforehand prepping for this thing. It went really well. And you're probably still thinking, well, Brad, where's the business? We're supposed to be talking about business here. So we're running the simulation, and I'm stood next to one of the sponsors, a guy from Morgan Stanley, and he taps me on the shoulder and he says, Brad, where did you get this tech from? This is cool. We would use this. And of course, at that point in time, I had the light bulb moment. I was like, right, not only have I built something here that has saved my ass because of this vote to become president, and I've finally delivered on my promise, but we've also built something which has got clear commercial applications. And so, we had a light bulb moment, spent a week or so catching up on sleep after the event. And then the German chap, Philip, his name is, who built this tech with me, we sat down and we said, let's turn this into a business. And so we had like almost a year left at uni, but we said, let's just do this because, there's clear demand there. There's someone saying that they want to use it. Let's go and pitch it. And so the long story short, Vishesh, after this is we went out there and started pitching this tech to the banks and to the business schools and got a lot of interest. That was basically my first business. We were licensing trading simulation software to banks and business schools.
Interesting. And so the banks would pay you, like, where would they use it? For training the new recruits or also running the simulation in other schools?
Both, actually, yeah. So mainly for training new recruits. but they would also start taking it to universities for simulations. And our business school clients would use it to demonstrate to their students because a lot of these business schools were teaching subjects like pricing of equities, bond pricing, macroeconomics. And, they get a lot of the academics of how to price an equity and, cash flow models and PE ratios. But then translating that into the practical, these things trade all day long and people are buying and selling them was a totally different world. And it was almost like a bit of an add-on to their courses to say, hey, we've done loads of lectures on this. Let's go and see what it's like in the real world. So yeah, it was a mixture of.
And so you guys had no background in, obviously you were college grads, you had no background in business. How did you price it? And how did you reach repeatability?
Yeah, good question. I mean, look, back in those days, we didn't have ChatGPT to type into how should I price this product. I actually remember how we got to a pricing model quite well. So our first customer was Bank of America. I think it was after the merger with Merrill Lynch. It's Bank of America Merrill Lynch is the name of the company. I mean, one of the biggest banks in the US. And we had a video call with her. She was in New York, and myself and my business partner, Philip. You can imagine two very young looking chaps, 20 years old, very, very young looking, had a full head of hair back then. And we're having the conversation. The first thing that happens is that she says, does it do this, this, and this? And I looked at Philip and he looked at me and we said, yeah, of course it does. Not that we were lying to her. We just knew we would be able to deliver that, right? Within the
that's
time.
the key. A lot of founders miss that. That's the
course.
key. A lot of founders miss that. There's a very fine line between what can be delivered and what can't. And if you just keep saying yes on what can't, you're gone. That's
Absolutely. I mean, look, fake it until you make it. And also, especially when you're bootstrapping a business. And this is the other thing, but this company, we never put a single penny of investment in. Other people's money, our own money, nothing. It was just blood, sweat, tears, and no sleep for a long period of time. And we built a piece of tech that was valuable. And when you're bootstrapping a business like that, sometimes you need to figure out where the demand is before you start building. And that's kind of what we did. So anyway, we're on this call and we look at each other and we say, yeah, of course it can do that. The next question was, how much is it going to cost us to hire this tech for you for 2 weeks? And we looked at each other again and then looked back and I said, could you just give us a day? We'll come back to you with a proposal. So she was like, okay, that's fine. We finished the call. We sit down and the two of us look at each other and we're like, we don't have a clue what this should cost. And in the end, we decided, look, we could go and speak to loads of different companies and try and figure out what's the average pricing for this kind of stuff. And in the end, we said, you know what? Let's just stick a number out there and see if it works. I'm sure a lot of the other entrepreneurs you speak to maybe put a bit more science into their pricing, but we were young kids and we didn't know what we were doing at that time. We stuck a number out there, $200,000 for 2 weeks. And she replied saying, okay, done. And that was it, basically. We kind of very quickly established what people were willing to pay for this kind of stuff.
For 2 weeks, you said?
2 weeks, yeah.
Oh, wow. Yeah, that's...
There was some other intricacies around it because it was not just, to be honest, this is one of the reasons why we ended up selling the business. So we weren't seeking to sell it. Someone came to us and offered to buy us out much further down the line, like 6 years later. One of the reasons we decided to sell in the end was the scalability of it, because whilst it was a software company per se, we were licensing software, it was also a training product. The licensing of the software came hand in hand with people having to be there to manage it to some degree. We would run this trading simulation, but then we would also have someone that went along and kind of did a 30-minute presentation on how markets function and and then of course how the platform works, and having someone on site to deal with any issues. It was not kind of SaaS, let's say. It wasn't a kind of plug and play, people download it. It came very much with a human element to it, which meant that we had some big paying B2B clients, but like the scalability of it was not huge.
And so how long did you run that business? And you said it was bootstrap. And what was next? I think You mentioned you started investing as well. Was that right after that? And what's happening right now?
Yeah, pretty much. So we ran that business for about 6 years.
Right.
And then in 2016 is when we sold. We had a financial training company based in London approached us to buy the business. As I mentioned, we kind of debated whether it was the right thing to do at that point in time mainly because of the scalability. We didn't ever envision the company being a unicorn or even like hundreds of millions. It was a bit of tech. And as I mentioned, scalability was not huge. So we ended up deciding to sell. Obviously, first of all, celebrated the sale. I think it took probably about a week to recover from the hangover. But we got I got some of my best photos with him. Like we've got us in a restaurant high fiving, and it was an awesome moment.
Of course.
No, I would have been 25, 26 at that time. So it was cool. But anyway, after the dust settled, we were back to business, and he was living in an apartment in Canary Wharf at that time. And I remember like 3-4 days in a row, we were in the apartment, eating a lot of takeaway, drinking a lot of coffee with a big whiteboard, thinking, kind of brainstorm ideas. And we were basically trying to push the limits of, what's the next business? What are we going to do next? And to be totally honest with you, we got to the end of that period and we were just like, you know what? We don't have something that we're so high conviction of. And it felt like we were trying to force an idea at that time. So we were just like, let's just take a step back. And instead of us trying to force our own idea, let's invest in other people's ideas. Let's find interesting startups and businesses and founders, and let's invest in their ideas. Now, I must admit, at this point in time, we hadn't ventured into the world of startup investing yet. We didn't really know what was there. Honestly, from my point of view, at that point in time, Dragon's Den, the TV show.
Yeah.
In the UK, it's kind of like Shark Tank in the US.
Yeah.
In my mind, that's what we were going to do. I think we even had the conversation, let's set up our own version of Dragon's Den and invest in, it was like that. But very quickly, we started realizing there was a world out there of investing in startups. Very quickly learned about these tax effective schemes in the US, SEIS and EIS, that allow investors to get some of their investment back from their tax return. There was also a cool thing with our sale of the business, that the capital gains that we'd made on it, if we invested that capital gains back into startups, there was a tax shield to have. So that even improved better the prospects of this. So yeah, that's what happened. And we started off together. Then we got a few friends and colleagues that saw what we were doing and were like, that's cool, we want to join you. So we ended up setting up a syndicate. It's called Sowing Capital, SOWING Capital, where most people think sowing, isn't that like playing around with and stuff? But actually that's sowing with an E, but sowing with an O is actually sowing a seed. So planting a seed and watching it grow. And so that's where the name comes from, Sowing Capital. And we were very much focused on, and still are, early stage pre-seed UK startups, and relatively agnostic. And this was 2016 and we were kind of slowly learning the ropes of investing in UK startups.
And so how many have you already invested in, and have you had any exits yet, or you're still
Still very much investing. We've invested as a syndicate in about 19 companies. We've had 2 exits. One was a 5x in about 6 months, which is a really, this was a really interesting one. Like we invested in this company is called Living Lens, and what they were doing is video analytics of supermarkets for big data research stuff. Essentially watching customers' behavior as they walk down the aisles, and do they look at a product or don't they, and then selling that back. Really interesting stuff. I'll be honest with you, at the time, I didn't know a huge amount about that business, but the founder was awesome. It was one of those where, this is often the case in early stage stuff. You're backing the founder and his, we absolutely loved his vision and his passion and all of that. And so we ended up backing him. And he unbelievably, in a 6-month period, we got an email saying that the company had just been acquired for cash, which is amazing news. But also because it was so early, we lost our tax relief. which was obviously the small downside in the transaction. So yeah, we've had a couple of exits. We've had a handful of failures, and we've got 2 or 3 in the region of 20 to fix that are trading and have like recently received VC investments, Series A, Series B, and beyond. Yeah, I'm not counting my chickens just yet, but looking forward to
Yeah.
some liquidity.
That is a good place to be. Although with some, I think the sooner the better. A lot of people are talking about the bubble. What do you feel? Bank of England 3 days ago put out a note as well. What are your thoughts there? Given you have
Yes,
finance background.
very interesting question because it's been on my mind a fair bit recently. I'm invested in some stuff that is very much caught up in this bubble at the moment.
Mm.
So quantum computing, some other tech stocks, AI related stuff. I mean, that's the liquid things. Obviously, I've got startup investments that are, whether there's a bubble or not, there's nothing you can do about it because you can't sell. But yeah, it's a really, really interesting question. And do you know what? I do think that there's some animal spirits going on in the markets at the moment. I do
Mm.
think the valuations of certain things are a little bit crazy. Think that retail investment flows, from what I've seen, are like at all-time highs, which usually when that happens, it's kind of an indicator of a bubble because all of your local hairdresser and your taxi driver and everybody's piling into stocks is usually the time to sell.
Right.
Set. So if it was just on price action and the kind of FOMO and animal spirits that we're seeing in markets, I would be tempted to say we're in the middle of a bubble. But the only thing that's making me doubt that is that in my entire adult and working life, I've never seen such technological change on a day-to-day, week-to-week basis. And what I mean by that is, you can look back and, be having dinner with your wife or whatever and say, isn't it crazy? Like 10 years ago, we didn't even have iPhones. I mean, 10 years ago, we did have iPhones, but 20 years ago, we had these Nokia things, and 10 years ago, we didn't have this. And like often over these long time scales, reflecting on technological change can be kind of, you see the change, right? But now, for the first time in my kind of working and adult life, we are seeing change on a monthly basis. Like I can look back a month or 2, 3 months ago and go, wow, we didn't have this thing then. And obviously this is AI driven, right? Like what ChatGPT is doing with Sora and the different new levels of ChatGPT. And it is mind blowing, the advancement in technology. And so for me, I feel like if this is a bubble, the bubble could continue. This is the problem with bubbles, right? Trying to call the top of a bubble, you can lose a lot of upside.
That's true.
So I mean, look, from my point of view, we could be in a bubble, but we could like double from here still, in terms of like valuations and momentum and stuff. But anyway, this is gonna be it's gonna be a funny outtake, isn't it? In a month's time when you record this and the markets are like 50% lower.
Yeah, no, it's definitely an interesting time, and my optimism is also probably because of the personal experience I'm having. Like as an engineer, the way I used to code in 23 versus 25 has changed so radically, and I see the output day in, day out. Um, and I'm like, this is real. And so, yeah, I'm sure there are going to be some losers, but it does feel like the bubble is also being hyped up now.
Yeah, I'm with you, man. A quick question to you, actually. Like you mentioned, you're an engineer coder. Have you played around in vibe coding? Have you had a go at that?
I do. So, I mean, I don't know if I can call myself a vibe coder. So I use Cloud Code a lot. And earlier I used to be primarily JavaScript, TypeScript heavy. Um, I am fairly versed in Java and PHP as well. But there were certain languages that either because didn't like them personally, like Python. Then there are languages like Rust, which is really good for building um, high speed, high performant desktop and mobile apps. And I obviously had no idea how to do that. But post AI, I'm building stuff in Python, I'm building stuff in because there are certain things that if you pick the right language, there is a lot of dev community for those problems that have solved those problems using those languages. There's a lot of content online that LLMs have already slurred. So there's no point me now using one hammer, which is the language I know, and build stuff because of my limitation. I can now, cut across and use the right tools. So yeah, that's been a massive change,
Yeah.
Plus the fact that it's gotten so good, I can write a mammoth epic, what we call in Scrum an epic or agile. So let's say there is a feature where I just added a feature on Jerry, which is an app I built for shit posting. So 1% of people on LinkedIn write, but the 99% don't because they don't want to look bad. And so I added a feature where they could create groups, they could send out a shareable link. So this was a fairly involved feature set. I spent maybe 30 minutes specking it a day before the morning I came up, started that spec to Claude, went for my coffee. It said it's going to take 6 weeks, by the way. That's the other
wow.
funny thing about AI because sorry about the digression here, but this is funny. So back in the day when people, I've been a founding CTO for so many companies, CEOs as a consultant, customers would ask me how long this would take. And I would pause for a second. A lot of times there's no time to go back and come back. Sometimes I used to do that, but sometimes I had to give the timeline right away. And what I would do is I would come up with a number. Before saying it, I would double it and then I would double it again. That was my process. If I gave the first number, it'll always be too aggressive. And the funny thing now is when you ask AI for a plan, it'll create a 6-week plan. And when you ask it to execute, it'll be done in an hour.
Yeah. AI has learnt our ways of operating.
Yeah.
It's taken the Vishesh model and it's doubled it and doubled it and doubled it. Yeah.
Yeah, that's funny. But to answer your question, yeah, it has been a big change. And I think maybe we are in a bubble, maybe we're not. And so coming back to, you've been investing at the same time. Now you're also an operator. Why did you choose that route? What made you become an operator again with ThatRound? What does ThatRound do? And how does that impact your investing?
Yeah. So, first things first is that, investing for me was just a side story because what we did with the first business, not only did I enjoy it, but also proved to me that you can make money, make a living, whatever. Money's not everything, right? But we work to try and make a return to survive and provide for our families, whatever. But you can do that with your own ideas and your own time and your own authority. It proved that to me and I enjoyed it. And it gave me a rubber seal on the fact that, you know what, I can have an idea. Maybe it takes me 3, 4, 5 years of a lot of blood, sweat and tears, but I can actually make something out of that and crystallize it in cash in my bank. So really that first experience just set me up to want to be an entrepreneur and an operator. Kind of took this diversion down the investing route mainly because something didn't feel right at that time. There was no idea, there was no pull, and we didn't want to force ourselves into something that we weren't ready for. So what I'm doing now at ThatRound, and I'll get onto that in a moment, is I feel like everything in my life pointing to one thing. Everything I've done, everything I've learned, all of my interests pointing to one product and solution that I want to put into the marketplace. But actually, there's a stepping stone before ThatRound, which is worth us talking about because it's one of the factors that led me to ThatRound, and it's another operator journey, another entrepreneurial journey that I went on. And actually, it's these bottles on the shelf behind me here.
All right.
It's a company that I'm a co-founder of. I am the second largest shareholder, and it's a non-alcoholic spirit. It's called CrossIp. So these days we're selling that into, I think, 25 countries.
Wow.
We do sell into India now. We've got a big presence in Asia, Malaysia, Hong Kong. Our biggest market is the Middle East. So the UAE, Saudi Arabia, Dubai is huge for us. And obviously, of course, we've got some presence in the UK and a little bit in Europe. But this drinks business, essentially what happened with that is that in 2020, so about 4 or 5 years into sowing capital and investing, a guy came to me as the kind of lead investor of sowing capital. He happened to be a friend of a friend, and he was looking for investment and guidance in his new drinks business, which is CrossIp. At that time, it wasn't called CrossIp. He didn't have a pitch deck. He didn't have a co-founder, and he didn't even have a company set up in the UK. So the guy was, very much a creator and an inventor. Let's call it a quasi-famous bartender in the UK.
Oh,
I'm
nice.
not sure if you've heard of the restaurant chain Dishoom.
No,
So
unfortunately.
it's a famous Indian chain in the UK,
Hmm.
and it's like it's a pretty well known brand in the UK, and he ran the chain of cocktail bars, and he developed a non-alcoholic menu there and gained some recognition, and eventually said, you know what, I'm going to create my own non-alcoholic brand. So he came to Sewing Capital, and he said, look, Brad, try these drinks. I tried them. I fell in love with them, thought it was awesome. And he was like, look, I want to turn this into a company. But unlike most startup founders pitching for investment, like, as I said, there was no pitch deck. There was nothing, not even a company. So I said to him, do you know what? I love the product. And as I mentioned before, I'd kind of been searching for that entrepreneurial flair to come back, the opportunity. Now, don't get me wrong, like very, very big shift from software company to drinks business. But, I don't know what happened, but there was just a spark in my mind. And, perhaps I fell in love with the product, the liquid, because I did taste it and I was like, wow, this is awesome. Like, this tastes like it's got alcohol in, but it doesn't. I think the other thing that happened at that time, Vishesh, was that Diageo, the world's largest spirits company, had just bought Seedlip in the UK. And it was 2019, 2020. They paid £100 million for Seedlip, and Seedlip was basically the first ever non-alcoholic spirit. And I thought, okay, typical entrepreneur, dollar signs in the eyes. I was like, okay, here comes another one. This guy's not even going yet. I've got an opportunity to take a co-founding stake in the company.
Right.
And all I need to do is set up the business and raise some funding.
Right.
And I thought to myself, do you know what? Like, I've spent the last 4 or 5 years chatting to founders. I must have looked at over 1,000 pitch decks. There is one person that can, on paper, in my head, right, that can raise funding for this company, with my network, with the investors, what I'd done with the previous business and my knowledge at that point of the startup fundraising market. I can do this. So I thought, cool, let's do it. So I kind of took a bit of a pause from the investing side, put my capital into this company, and I went out as a co-founder. And my role in that business was co-founder and CFO. Pulled a team together, and I went out and raised money. And over a 2-3 year period, I raised £3 million for that company. It is now, fingers crossed, which would even / profitable team in place, and therefore less reliant on me. As I mentioned, still shareholder, co-founder, but I'm not operationally involved in it. Got a lot of respect for Tim, our CEO, who runs that business. He's doing a great job. But what that period of raising funding taught me was actually a really big catalyst for my current business, ThatRound. And that was that raising funding for a pre-seed UK startup is an absolute nightmare. No, seriously, it is inefficient, fragmented, opaque, disconnected. I spent 3 years banging my head against a brick wall. Honestly, with the entrepreneurial mindset, the entire time I was raising funding for this drinks business, I was going out on morning jogs. I'm very much into my keeping fit and activity. Most of my good ideas come to me when I'm having a jog. And I'd come back from a jog and I'd sit down and I'd be writing out ideas for this next business of mine, because I'm thinking I need to solve this problem. And the problem is, as a founder in the early stage, let's say pre-seed, seed UK startup ecosystem, there's loads of different angel groups, investor syndicates, and there's over 100 angel groups in the UK. There's around 40 to 50 investor syndicates. There's fundraising services, fundraising consultants, brokers, introducers. You have people hitting you up on LinkedIn saying, pay me 5,000, I'll introduce you to family offices.
Right.
And, of course, there's a lot of founders out there that are vulnerable. Like, they need, they're looking at their cash runway on their financial model, and they're like, we need funding in the next 3 months. So, there's vulnerable founders and a very inefficient system for raising capital. And so, leading on to the next business and my current full-time focus, which is ThatRound, we're solving that for founders in the UK ecosystem. We are a marketplace and an aggregator of all the different possible routes to capital that you can find as an early stage company in the UK. So think angel networks, investor syndicates, fundraising services, brokers, introducers, routes to VCs, That's basically what we do. For your kind of UK listeners who will be aware of Rightmove, which is basically like the marketplace for real estate. I can't remember what the US one is called. Zillow. That's right. Yeah. We're essentially the Rightmove or the Zillow of UK startup fundraising. We're replacing the old school, again, giving the real estate comparison. We're replacing the old school, go to this estate agent, have a conversation, go to this estate agent, have a conversation, go to this estate agent. We're replacing that with a one-stop platform where you see all of your opportunities in one place and you can click a button, engage with them, find out feedback quickly, and just basically streamline and speed up the entire fundraising process.
Interesting. And like, how long have you guys been doing that? And is the plan to move beyond UK, or you're going to focus on in the UK?
So the company was set up at the end of 2023. I spent 24 building the tech, hired my first employee in January 25 this year. We're now a team of 6 of us, so still early days. We launched the actual product for use into the market in April of this year. So we've been going just over 6 months. We've seen some significant traction in that time. We've had over 250 startups come through the platform. We've got 180 partners listed. Lots of interactions. I think at the minute, 12 investment rounds that were generated via ThatRound initiation that are going into closing. We recently just closed a £500,000 pre-seed in a really interesting Bristol PhD spin out of a photonic computing company, which is a really big interest of mine. I just think that faster computing is going to be huge over the next 10 years. So yeah, we've got a lot of traction and early success. To your point on international expansion, I think that is something that we look at, and it's something that originally, obviously the US, right, is the big market that everybody thinks of. But actually there's a big problem to be solved at the moment in the UK. And I think we're going to focus on the UK because one thing that we've realized over this 6 months is that although the space needs better tech to make it more efficient, and that's what we're doing with ThatRound, early stage, it is very much about relationships and distribution. It is about getting into, at the end of the day, you're trying to surface the best and most innovative businesses and match them with the investors. And you're also trying to help those startups that are stuck in the middle of that navigate to the right funding options for them as quick as possible. And I think there's a lot of, each geography has its own intricacies.
Right.
So I think there's an aspiration to move to the US, but for now I'm very much focused on fixing the UK system. And then I think once we've done that and we've built credibility and brand, we can then go, okay, let's try this now in the US.
And what kind of startups are you seeing joining the platform right now? Is it sector agnostic or mostly SaaS?
It is. So first of all, the platform is sector agnostic. Our motto is where startup funding begins. So you're a startup, you want to raise investment, you start your journey at ThatRound. And then from there, you go to the different channels that fit for you. So we are agnostic. That said, we are seeing some relatively strong themes at the moment. The biggest one is AI. So we actually did, So there was a Y Combinator. It's called like a startup demo day. Maybe you'll know what it's called.
Startup school.
Yeah, perhaps that's it. There's some kind of show where basically like 180 companies get 2 minutes to pitch, or maybe it's a minute or something like this. They pulled a data point out that 60% of those companies that pitched had AI in their pitch, a mention of AI in their pitch.
Right. Yeah, that's the demo day. Yeah.
Which I guess is fine, because these days, if you don't mention AI, you're not going to get funded. On ThatRound, we did a similar bit of analysis. 62% of all companies that have come to our platform mention AI in their tagline. So AI-based app for insurance, or whatever, climate tech using AI to blah, blah, blah.
Right.
And so we're seeing a huge AI theme in this early stage investing world. But the funny thing is, there's a massive divide between what the two sides of this marketplace think is the right thing and want. The startups in general seem to think that if I don't have AI in my pitch, I'm screwed. I need to be mentioning AI. they're either thinking that, or unfortunately, their business is some kind of ChatGPT wrapper where it's like, AICV.com, and basically they've just got a front end that they plugged into ChatGPT, and they think they're going to get funded, which unfortunately they're going to struggle. The startup side is like that, but whereas the partner side of our platform, obviously we've got relationships with all the different angel groups, the syndicates, and we're getting feedback from those guys all the time. They're being totally swamped in AI related businesses.
Right.
When it comes to startup investing, it's about being ahead of a big wave and not in it. And I think at the moment, this AI wave, especially at early stage, it's already broken and it's at the shore. So yeah, I guess to your point, we're seeing huge amounts of AI businesses coming through the platform, but they're not picking up a huge amount of traction from the investor side, because investors are very wary of the fact that there's a huge amount of supply in this sector.
And so the big question is, what's the next wave? What are you seeing that the investors are interested in right now?
Yeah, I mean, I've already alluded to it a couple of times on this call, which is faster computing, basically next gen computing, without a doubt. Anything to, we've got two huge themes going on at the minute, which the wave has already broken on, right? Crypto and AI. Those two things are, forget startup world in those two topics because they're mainstream. The US has basically just endorsed crypto, and AI, the NVIDIA is the biggest company in the world, and OpenAI is the biggest startup ever in the world. These are two themes that have massively gone already, but they're pushing out there's a derivative of both of those themes, which is massive consumption of computing power. Right?
Yeah.
So like companies like Google and OpenAI building data centers in the desert and having to install their own modular nuclear reactor next to it just to provide the energy to power these data centers is mind-blowing. It's totally crazy. And bear in mind, this is a world where like a lot of these large language models parameters are in the, I don't know, 400 billion, they're in the hundreds of billions. Whereas there's potential use cases for AI that would improve certain things, such as like gene sequencing, like, can we solve the cancer problem, drug generation, where like scientists would love to be able to play around with like trillion parameter models, right? Or even multiples of that, which at the minute we don't have the compute. I think to train a large language model, it might take, you probably know this better than me, but like months to train a large language model these days. So imagine you've got to train one with parameters in the trillions. You're talking about years to train a model, which just won't work. So there's, we've got this huge AI push where suddenly, Moore's law of classical computing has hit its limit. There's only so small we can go with classical computer chips, in my opinion, and we need new technologies to make faster chips. The answer to your question is, I think quantum computing is going to be huge. I think that stuff that sits in the middle of classical computing and quantum computing will be huge. So there's an area of computing called photonic computing, which is using optoelectrics, basically light, to power the ones and zeros instead of transistors. Just anything in that world to power decision-making quicker is basically the next wave of investment, in my opinion. We're not, just to finish on that, we're not seeing a huge amount of that though via the platform at the minute, because I think a lot of it's very early and it's happening in labs and in universities at the minute, but I think there'll be a wave of it to come.
And so I guess outside of that round, then the syndicate is still going, and probably you're putting some money through the syndicate. You have the syndicate also going, right?
Yeah. So we have actually just invested in a company called Hartley Ultrafast, and what they do is they're in this photonic computing space. They're actually a team of quantum computing scientists from Bristol PhD that kind of pivoted and went, they found a bit of an aha moment in photonics, and they're building chips to basically make decisions, where a typical computer chip like a NVIDIA processing chip at the minute can make a decision. These chips have the potential to make that decision 1,000 times faster.
Hmm.
And so, the technology behind it is instead of sending electricity through a bit of wire like a transistor, they're using light. And obviously, therefore, I think that their slogan is, decisions at the speed of light. So we are looking in that space. We have just made an investment there, and yeah, I'm very much keeping my eye open for more tech like that as well.
Yeah. Yeah, I think I kind of agree. That's where I would put my money as well. In fact, I have like Rigetti, and there is this index fund out of US called QTM. So I've started putting some money as well in quantum.
Yeah.
And what do you think about semiconductors?
What do I think about? Sorry.
As a finance guy, and are you putting money in semiconductors, like companies that are making chips or materials, raw materials?
Yeah, it's interesting. I mean, I own shares in a company called ASML, which is basically a Amsterdam-based. They make these EUV machines. So basically, they make the machines that make chips. I mean, I own shares in that, but only because they had a big pullback recently. I don't know. It's a tricky one. I tend to position my investment bets on the big payoffs. And therefore, I think that actually the classical computing chip companies that exist already
Right.
it's behind the times. And as I mentioned, I think that there's, for the last 20, 30, 40 years, we've had a few chip makers and obviously it's all been classical computing. It's all been transistors that have been the makeup of the majority of chips across different industries. And I think what's going to happen over the next 10 to 20, 30 years is we're going to have all sorts of different types of chips that are specific for different types of applications. So for example, in like machinery where having to measure the vibrations of a particular machine by the nanosecond to make sure that things are operating efficiently, you may have like photonic chips there because the only thing that's going to be able to make a decision fast enough is the speed of light. Whereas making decisions on large probabilistic calculations might be done by quantum computing at some point. And so I think there's going to be a huge wave of innovation, and there's going to be lots of different chips that are relevant to lots of different industries. And obviously, probably the big chip players will just end up buying all those startups along the way and expanding. So to answer your question, I don't think I'm not a big fan of the big semiconductor companies anymore. I think they're behind the times. And I think, yeah, the players to find the smaller ones that are working on the more innovative stuff.
And I guess AI is also going to open doors to others. Like people are going to be able to use AI to innovate in other sectors. And I think that's where the next opportunity is, not just an AI company, but people who are leveraging AI to unlock other sectors that have not been moving fast enough. For example, energy storage or quantum computing. Yeah, makes sense. Makes sense.
Yeah. One of the ones I've invested in myself actually is like drug discovery and the use of AI to accelerate that, which I think will be interesting as well.
And so with the syndicate, what kind of ticket size are you investing?
Small end, so obviously we're investing in usually pre-seed companies that are doing rounds of like £500,000. So depends on how many of our investors get involved, but between 100 to 250.
Besides the two-sided nature of the marketplace, what specific problems are you solving for the startups apart from the reach? And are there any problems you're solving for the investment side of things, for the investors? And are you selling to both, or is it you're selling to one and getting one is the other side is getting it for free, pretty much?
Yeah, good question. I mean, look, classic marketplace problem, right? There's two sides of this marketplace, and each side has their own problems that you need to solve for. Yeah, I mean, look, in terms of commercially selling the business model and how we make money, we can get into that in a minute. But in terms of the sales pitch, absolutely, there's a sales pitch to both sides of the marketplace because there is a problem that we're solving to both sides. And for a marketplace, you need that pull from both sides for it to work, right? If you have one side where there's interest and there's nothing on the other, then there's no value. So it's about the tech, which we think we've done a good job of, at least for an MVP. But it's also about the distribution, having both sides of that marketplace plugged in. Now, the interesting thing is, I mentioned that the original light bulb moment came from my problems and difficulties raising capital for CrossIp, the drinks business. The inefficiencies, the frustration, why can't I see all of these different angel groups and investor syndicates in one place? Why does that not exist? So originally it was solving a problem for those guys. As we started building the tech and chatting to the other side of the market, we realized there was a huge problem to solve on the other side of the market as well. And the funny thing is, these two problems are almost the opposite to one another. So the startups, they are essentially frantically trying to find investors, trying to figure out where all of these investors live, how to access them, how to find the angel groups, how to figure out which ones are relevant to them, how to access the VCs, how to get a warm introduction. They're frantically trying to figure out where all of the routes and most efficient routes to these guys are, right?
Right.
That's one side of the marketplace. The other side of the marketplace is getting swamped with decks, with pitch decks. And they're so inundated with the amount of companies coming to them, they can't handle the volume. I was chatting to the lead, basically like venture scout of one of the UK's biggest angel groups and most respected angel groups recently. And she said that in the month of September, they were having a pitch deck every hour sent to them. And you need to remember that like most of these angel groups, they're not huge institutions, right? They're early stage investors. They manage groups of angels who are usually part-time, like they have jobs that are not angel investing. They're not like VCs that have dedicated teams to do their due diligence and manage this stuff. Most of these angel groups, as I said, there's over 100 of them in the UK. There's over 600 in the US, by the way. They're inundated with pitch decks, and most of them get over 100 per month. But this particular group I was chatting to the other day, she said they were literally getting a pitch deck every hour submit to their website. But here's the other interesting stat: 70 to 80% of the deal flow that these guys receive is totally irrelevant, right? There are angel groups out there that say we invest in deep tech, IP, must have a patent, founder must have, super specific stuff, and they're getting pitch decks of a cookie company, a healthy drink company, because this is the problem, because of this inefficiency. On this side of the markets, the founders are frantically trying to get investment. And so they're just sending their deck everywhere. They're spending hundreds of hours on Google and LinkedIn and just pinging their deck. They're cold outreaching people and just firing bullets randomly. And on the other side, the partners are getting inundated with irrelevant startup pitches. And what we do is we solve that problem. So first of all, we make, as I mentioned, for startups, we make it much easier and open for them to see all their options. So think booking a hotel and you land on booking.com and you can see all your different options. You can see the prices, because remember that some of these investment groups, they'll charge like success fees. Some of them even charge a due diligence fee. So we give the full transparency on pricing. We allow other founders to give reviews so you can see that, I worked with these guys. They're awesome. This group invested in us. We really make that much easier from the startup side. What we do for the partners is that we intelligently match to them. And how do we do that? Without giving too much of the secret sauce away, we ask these startups to give us a lot of information. Some people may say, we just want to upload our pitch deck. But the problem with that is pitch decks they're a sales technique, right? Yes, if I'm interested, I want to read your pitch deck. But also, if I'm an investor and I've got certain criteria, so let's say I'm a SaaS investor and I need the business to be doing more than 10,000 MRR. Most pitch decks won't have that in the pitch deck. And so I've got to read the pitch deck. I've then got to go, okay, I'm interested in you. Then got to get on a call. Then got to figure out where and like after 45 minutes of my time, I figure out your MRR is only at 2K. Waste of time.
Right.
So that's just one example. But we have partners that, for example, will only invest in companies if their founder has a PhD in that topic. We have partners that will only invest in a company if there's a lead investor in the round. These are like very, very specific qualitative details that you typically don't get out of a pitch deck. You need to ask those questions. We ask all of those questions upfront, startups, and we ask all of our partners the questions of what they need. And we therefore can, there's some AI involved. There's also some human checking involved. We can very intelligently check any startup comes through our platform, which of our partners are relevant to them. And we do that matching so that if a partner receives a deck or a pitch from ThatRound, I can almost guarantee you they will be interested in having a look. And that's what we're doing with our brand. We are building this trust in the ecosystem that actually, if there's an introduction made via our platform, it's going to be a valuable one and not a waste of your time.
It's definitely a problem, and that's a very neat solution. And so, what are some of the current challenges when it comes to where you are at with that round and what's next?
Yeah. Okay. So challenges, I would say the first one is probably another marketplace problem,
Yeah,
which is you've got, we're a relatively small team, and now on both sides of the marketplace, we've got like in the hundreds.
right.
Who've, you've got a couple of hundred on this side, couple hundred on this side, but that's not just 200 interactions. That's like every one of these guys can interact with every one of these guys. We're talking exponentially, an exponential number of interactions, and that's only going to continue to grow. So one of the problems is basically the load factor on the amount of activity that we're seeing. And there is still to some degree a human involvement in all of that. Because we very much want to grow the business as a founder first business. I'm usually involved in a lot of these conversations myself, but also we're trying to do things that don't scale to start with and try and get that feedback from the customers and figure out what to do. So short-term challenge, to be honest, this is the same as any founder you're going to talk to at the early stage, is we don't have enough time and we don't have enough people. I'm wearing 10 different hats. So is my co-founder. That's the short-term challenge. I think the long-term challenge is going to be convincing an entire marketplace to change what they're used to. So I think like a lot of like every VC, every angel network, every investor syndicate will have their own slightly nuanced version of what they want from a startup, right? Fill in my onboarding form, upload your pitch deck. It needs to be no more than 10 pages and answer these questions. And then the next angel group is going to be like, upload your pitch deck. We also want to see this, this, and this. It's kind of the same thing, but just asked in a different way. And at the moment, that is a huge frustration for founders. I've got to fill in a form 10 times to 10 different people. Of course, what we're building with that round, the long-term vision is they fill in the form once with us, and everybody on the partner side, they accept this universal way of analyzing a startup. Yeah. And that feeds into theirs. And so we're kind of seeing the early signs of that at the minute, but having to convince every single one of those partners to say, okay, we'll use that round version of this will take time and will be a challenge. But to do that, I think what we need to do is what we're starting to do now, which is build trust. We build trust with those partners. We show them that startups that come through that round, that we match with them, are some of the best and most relevant startups they've seen. They then start to go, okay, this is interesting. Maybe we'll start using that round more. And then as time comes on, we pull them into our infrastructure. So that's probably the biggest challenge, I think.
So basically, if you crack one side and get a majority, then the other side will follow. Are you trying to short term become the docs end of funding rounds for pre-seed?
Perhaps. I think the doc send and like the data room hosting is one thing, but it's more about, not to prolong the answer too much. I think in a way, yes, in a way, I think
Well, at
it's
least
more
that's the initial pull, and then they get the additional upside.
Yeah, I think so. Look, I think it is. Yeah, it's tricky because you think it's the pull from one side and then you get the other, but then the
Right.
pendulum swings and suddenly you're like, actually, we need people from this side to get these guys to be interested.
Yeah.
And then,
Yeah,
this is a
chicken and egg.
classic marketplace problem. So basically, kind of spelling it out, no startup is ever going to join that round if we don't have any investors or any partners on the platform. So we need to get that supply side first. But then none of those partners or investors are going to be interested or want to hang around if the quality of startups we're bringing is either low or like not targeted enough. And so that's the next phase. And then basically over time, the pendulum swings and eventually we build this central marketplace, which is kind of the accepted and go-to for those introductions.
I've had some experience with marketplace as well. We were trying to do that could be beneficial for a marketplace is you, because there's a chicken and egg problem and one won't come because the other. What you do is you create a future event which is either a physical event or a event as in a time where you promise both sides, hey, 5,000 startups are coming on this day or will be available on this day. We are opening the platform and signing up. And same goes for the investors. For the startups, you say 5,000 investors are going to be where. And so when you create a future event, you can then promise both sides, and then you've kind of killed the chicken and egg problem, right? Because in the
Build
future,
a bit of a waiting list and a build
yeah.
up. Yeah.
And so you don't have a chicken and egg, because to both sides you can promise the other side exists in that future date, and that way you
Right.
kind of crack the whole cycle.
Yeah. I like that. That's a good. The only problem that we have with ours for that, because we kind of did that at the beginning, is that startups, the two sides of our marketplace, one of them is consistent. So the partners, the investors, they're always investing. They're always on the lookout. They're always going to be on the platform. The startups come and go in
Right.
waves. I'm raising. Okay, my round's done. See you later. Or I'm raising. This hasn't worked out. We're folding the business. So you can only kind of catch these guys during a short period. It's a tricky one, but we're getting there with time.
So that was it, and it was great having you. Thanks for taking the time and walking us through your journey. It's super interesting stories.
Thanks very much, Vishesh. Appreciate your time.
By the way, one last thing: where can people reach you, and is there any promotion that people can avail?
Yeah, sure. I mean, look, if any of your listeners are UK founders that are either raising at the moment or looking to raise in the next 6 months or a year, as I said, thatround.com is the place to start that journey. They can also get a discount to subscription using code VWV50. That's VWV50. And always, you can hit me up on LinkedIn as well. It's Bradley Jones, founder of ThatRound. Find me pretty easily. And I'm always happy to jump on and have a quick chat with any founders in the UK building something innovative.
Thanks again.
Cool.
If you found this valuable, you can subscribe to the show on Apple Podcasts, Spotify, or whatever your favorite podcast app is. See you in the next episode.